Welcome, Prasun.
Hi, Cyril. Thanks.
Well, your wife wasn't able to join us tonight, but tell us a little bit about your family.
Yeah, I'm based in the Houston area. I'm an oil and gas executive. My wife, Maumita, she's a teacher at one of the school districts here. As you can see, my daughter here, she's a fourth grader.
Excellent. Okay. So, how did you happen to find Lifestyles, and why did you join Lifestyles Unlimited?
Yeah, I came to know about lifestyles to one of the members, and then like it sounded pretty interesting. So then I thought that maybe I'll attend one of David's class. So it was around like September and time frame wherein I last year wherein I attended David's class, and after attending his class, I mean, as I said, I mean my inquisitiveness grew more, right? I mean, wherein I can make some quick and fast money, right? I mean that's what I was primarily looking for, like working with on the in the oil and gas sector, so trying to looking out from that, right? I mean, though I'm not there yet, but I do have taken the first step in that direction. So
Okay.
yeah, so after attending his class, so I joined Lifestyle.
Excellent. Let's go to the next slide there. Okay, and we're going to talk today about a property you bought at East Cypress Wood. I believe that's in the Spring area. And you purchased this property in November of 2020. So during the pandemic, when everything is, most things are on lockdown and people are laying off and businesses are struggling and people are struggling, you were able to find a property that you purchased in 2020. And so these are pictures. Now, you did some rehab on the project. We're going to cover your numbers in a second here. So let's go and go to the next page, please. So I'm going to run through the numbers and I'll ask you some questions about it, Prasun. So you
Hmm.
found the property and it had an appraised value of 200 and put my glasses back on. So an appraised value of $230,000. But because it was a distressed property, you were able to buy it for 164,260. So that made your initial equity a little over $65,000. And you put some rehab into it. And we'll talk about a team, but you didn't do it personally, but you had the rehab done for 14,000, a little over 14,000. You had some closing costs. They were two different loans, a hard money loan followed by a conventional loan, and that was almost 13,000. And that left your net equity of $38,842. You were able to put cash out of your pocket of 24,241, and with your equity of 38,000, that means your return on your equity slash capital gain is 160%. So you actually made money the day you closed on this property. You did both of your closings. You had it rented out at $1,850 a month. That's $22,200 a year. And your cash flow, the difference in your rent and your monthly payment, your principal, interest, taxes, and insurance is $632. So that's $75.84 annually. And that gives you a cash on cash return of 31%. And so that's fantastic. That cash on cash return for the new listeners, that's the same as an interest rate if you had money in a savings account or a CD. That's the gain you'd make on the stock market. Now I know the stock market, because it dropped substantially at the initial part of COVID, it's come back. As I understand it, I'm not in the market any longer, but it's come back. But traditionally, I looked up the S&P, the Standard and Poor 500. For the last 10 years, they've been averaging 11%. So you almost three times what the Standard and Poor is on this one property. So congratulations, that's a
Yeah.
fantastic job locating this property, getting it up and running. Anything you want to add to these numbers?
Yeah, I was looking for a property after joining Lifestyle, which would essentially give me a good amount of cash flow, like you see here, and at the same time a good net equity, right? Return on capital gain. So I spent quite a significant amount of time getting the fees. I mean the input that we get from our realtors at Lifestyle, right? Giving us a list of all the different properties. That's another advantage that we have by joining its membership here. So yeah, I was surfing through those, but finally, I mean, I could find something that actually meet my requirements, right? And then yeah, I mean, this property was like, I mean, it was an easy rehab, I mean, there's not too much of stuff to do with it. I mean, I got some flooring done, I got some cosmetic updates done. I mean, everything else was more or less perfect. So yeah, this was definitely a very good property.
Looks like David has something to say there.
Well, I'm upset because he wrecked my speech. Prasun, I gave my speech with Monopoly, and I say we make between 200 to 600, and then you go and make more than $600.
Yeah, yeah, I beat you.
But see how big his smile is? It's hard to get the petroleum kind of guy, in that industry. It's up and down all the time to smile like this. Are you happy with your returns per son since you joined?
Yeah, absolutely, very much. Yeah,
Yeah.
yeah.
So,
I
and
couldn't expect this more than that, right? Right. I mean, at least to
yeah.
start.
I know there's a lot of people in Houston in the oil and gas industry, and they've been through hell and high water, the ups and downs. What advice would you give the new people that are skeptical about lifestyles, never been to a seminar before? What advice would you give the new folks?
Yeah, I would say that, yeah, definitely attend the seminar. I mean, this weekend, I mean, you will get a lot of inputs, a lot of ideas, perspectives from David that will definitely, and I'm sure, I mean, after listening to him, I mean, you will definitely make the choice because this is probably I'd say once in a lifetime opportunity to join lifestyles and then get into the bandwagon, right? That's what I would say. I mean, there are a lot of opportunities out in the market. Yeah, with dedication and focus, and the mentors there. I mean, Doug has been my mentor, and then yeah, I mean, he has been like available anytime. I mean, because it was new to me, so I used to call him like every now and then, Doug, what should I do this or this or okay, what to do about this, right? So the feedback, the guidance, I mean, that you get, I mean, it's terrific. So just don't take anything else. I mean, attend the webinar, seminar, and then make the decision.
And Sorrell was bringing up about that rehab, that $14,000 worth of fixing it up and stuff. So this is like the TV show. You went out there and you fixed up the house yourself, right?
Yeah, I mean, I had to employ a vendor. So again, the other thing is like, I mean, when you join lifestyles, I mean, everything is available to you, right? I mean, you just have to like utilize those resources. So we have a vendors list. So yeah, I mean, whomever you feel comfortable working with, and each of those vendors are rated, right? I mean, they have feedbacks in there, reviews in there. So you choose one, whichever you like, and then yeah, I mean, there's a lenders list, right? That was also another aspect. Like, I mean, if I have to go myself and look for a lender, right? I mean, that's and then someone who deals with like, because as Sorel was saying, there are two parts. One is hard money, one is conventional closing, right? So I never heard about hard money earlier. Before I joined, right? So, and then I didn't know like in terms of hard money lenders. So that was something new to me. But yeah, you have everything served up to you. You just have to utilize those resources and then invest in the property.
So basically, just so the new folks understand this, I know Sorrell always goes through this, but I want to make sure new folks understand. He didn't do any of the work. He went to the vendors list, he found these contractors to do the work, and he wrote them a check. That's how tired he got. I mean, that's a lot of work, writing a check. You get finger cramps. We're not there doing the work, guys. We're teaching you to be invested. I just want to make sure we covered that. And there's one
Even for
last thing I have to do. It. Go ahead.
Sorry, even for the check, they'll probably come to your house and pick up the check.
Yeah, I know. You can be even lazy and you can, wire it to them or something, right? So they came to your house. That's even nicer, right? So
Yeah.
one last thing, when you make over 100% return, there's a technical term in the industry. I don't know if you know it. Prasun, do you know what it is when you make over 100% return? The technical term?
Return. What is it? It's okay. I'm trying to think. Return on
It's
equity.
okay. That's why
That's a
it's
good
okay.
question.
Sorrell is also your mentor. I'll let him answer it. Sorrell, when they make over 100% return, what's it called?
It's a quote from you, David. It's called "Peeing your pants excited."
There you go. You did it, Prasun. I'm just proud of you. You came to my seminar in the middle of COVID. You buy a deal, you make over 100% return. That's being a business site.
Yeah, and
Yep.
I want to just continue on that, Prasun. When did you join Lifestyles Unlimited?
I think it was September of last year. Yeah.
So during the height of COVID, you joined Lifestyles Unlimited. You found a property, and I do have to tell the people out there watching that your numbers are not only are they spectacular, they're actually above the averages right now in the Houston market. And so to find this type of spectacular property, you joined in September. You bought the property in November, and so how long did you have to wait? How hard was it to get this property? How did you find this property?
I mean, the weight was more on my side, because I had some numbers, some parameters on my mind. But then, I mean, in terms of opportunities, in terms of properties, I mean, there is plentiful, right? I mean, as I said, we have the realtor network, so they keep blasting you emails every day. I mean, you'll probably get like 3-4 emails from 3-4 different realtors every day. For me, I mean, so moment I saw this, yeah, and that's what I wanted. Like, so I reached out, and then yeah, it is probably like a gap of like 1.5, 2 months, right?
Okay. So even during COVID, even during a very strong seller's market, even with very limited inventory out there, you were still able to find this property that's well above what the current averages are in the Houston market. So fantastic job on that. Let's look at the next slide, please. Okay, so I think we may have. So I know your primary mentor is Doug Butler. So you worked a lot with Doug. And who was your realtor?
Alex Mills was my
Alex
realtor.
Mills was
Yeah.
your lifestyle's realtor. And
Mhm.
did your contractor come from the vendor list also?
Yeah.
Who was that?
His name was Brandon Longhorn. Yeah, I'm
Okay,
just trying to get the names. Yeah,
Longhorn Investment. Okay.
Longhorn.
And
Yeah,
what about
he's
your?
a nice guy, man. Yeah.
Did you use the vendor, the lenders from the vendor list also?
Yeah, it was also from the vendors list. What is that? This keeps coming in and out.
That's
Uh,
fine. No problem.
yeah.
Tell us what's next for
I
you.
got it. I mean, the lender was Catalyst Funding.
Catalyst funding. Okay.
Catalyst, okay.
So tell us what's next for you. What are your short-term goals, your long-term goals? Where do you want to take this towards your financial freedom?
Yeah, I mean, to continue investing maybe in few more single family properties at this stage and get more experience, more perspective, right? And then in the process making some returns on there. And then on longer term, definitely like move on to like multifamily investments. Yeah, so
Excellent.
I'm trying to do it like step by step in a phased way.
Excellent.
Mhm.
You have something at first, Ed?
No, I just want to see if he wants to take some questions from the members out there listening. Sound good?
That sounds great.
Who's asking our questions tonight? I don't know. Hopefully they'll come in.
Hi there. This is Haley,
The more
Member Services.
Oh, Haley. Okay, Haley.
Really?
Haley, we're not allowed to see you
I
tonight, or
I
you?
don't have my camera quite
That's okay.
set up. I apologize for that.
Haley looks like this beautiful goddess. Everybody just imagines her, and she's going to ask us questions. Go ahead.
Well, thank you. Well, I did touch on one question, but someone was asking about the rehab and closing costs and why is the out of pocket different from that? Where is that? Basically, I think they're a bit confused about how that all adds up and how that out of pocket is.
Sorrel, would you mind kind of giving a?
Yeah, I'll take that one real quickly.
Sure.
So the advantage of the way Lifestyles teaches it, and David's going to go over this in detail this weekend, is that when we have a hard money loan, you actually have two different loans. You have two sets of closing. That's why the closing cost may seem a little bit higher than normal, but the ability is you get to come out of pocket for a lot less. If you had done this in a typical manner, you'd spend 20% of $164,000, which is about $32,000. Then you'd pay the rehab out of pocket on top of that, $14,000. So you're at about $45,000 out of pocket to buy this property with just a conventional loan. But a hard money lender will give you 75% of the appraised value, and they will wrap the rehab into that, and that makes your out-of-pocket dollars considerably lower. And that's one of the ways that we're able to buy the multiple properties doing it that way. And David teaches all that in much more detail this weekend.
Yeah, so that was a quick snapshot version. I know there's a lot of words we're going to use tonight, like ARV and stuff like that. You don't know it? Don't worry, I'll break it down very simple for everybody to understand this weekend. But it's basically, like he said, they went to use a specialized lender that lent them not only the money to buy it, but the money to fix it up. And then once they fix it up, they used another loan to go to a Fannie Mae loan, which is a government loan at like 3% interest, over the next 30 years. And I'll explain all that this weekend. It's a very conservative approach. And that's why it's that amount of money out of pocket. Okay. Great question.
I have a couple more questions that just have come in. One is, how close were the numbers listed in the realtor's email of the property close to what actually was spent and earned?
So Prasun, why don't you take this one? So you got an initial set of numbers when you first found the property. Property was sent to you by a realtor, and they gave you some projections. So from those projections to your finished product, what we're looking at now, how close were those numbers?
Yeah, they're pretty close. I mean, I think the ARV that I got was like 227,000. And
227?
then the final appraisal that came out from the appraiser was like 230,000. So yeah, that's the other thing. I mean, if you're lucky enough, I have friends like who are also members. Like, wherein sometimes, they get a little bit more of an appraisal. So that's another area wherein you're out of pocket, like coming back to the out of pocket thing, right? It comes down. Yeah, but mine was like 3,000 more.
And what we do for the people out there is you get an initial set of numbers, and it includes the perceived appraised value, what the out of pocket will be, what the rehab will be. You go out and look at the property with your team that you build before you ever go see it. And so you have like 2 or 3 steps along the way where before you even put any money out that and then once you run some, your evaluations, you're ready to make a move. So, Prasun, what was the expected out of pocket going to be on your very first time you saw this numbers on this property?
It was again pretty much similar, I would say. I don't remember it exactly, but it was probably like around the same numbers,
Okay.
Yeah.
The one good thing with the work,
what I'm trying to say is that there's not too much difference between what was actually initially estimated and calculated, right, and then what it actually turned out to be.
Yeah, lifestyle realtors tend to be pretty conservative. They're not going to send you a property and show you that it's a $250,000 appraised value and it's 20,000 or 18,000 out of pocket, and you have to come out with another 4,000 to 6,000 out of pocket. They tend to be pretty conservative, and the numbers usually come out pretty close to what they were, and sometimes even better. So, but then you're going to do several steps of we call due diligence between then from the time you first see it until you actually have to start putting your money out and sign contracts.
And a step further, a step further on that is, folks, if you understood the experience level of the Lifestyles realtors, we don't even call them realtors, we call them investment specialists, because they walk so many deals, they do so many transactions a year. I think Moon Kim in their city does over 200 houses a year, and that's just one realtor. He's like one of the #1 realtors in the Houston market. I mean, that's the level of volume. And if you see that many properties, and you run that many deals, you really know your numbers and hone it in from a conservative approach. Sorrel, I don't know if you know exactly how many deals he does.
I don't have the exact numbers, but I know that there's 2 or 3 of the, there's over 40,000 realtors in the greater Houston area, and most of them are in the top 25%, but 2 or 3 of these are in the top 10%. Of all of a number of transactions in the greater Houston area. So you're dealing with the best of the best when you work with the realtors, not just in the Houston market, but in all of our markets. I just happen to be familiar with the market. Haley, you got anything else for us?
Yes, thank you. I have one last question from Janet. She was asking, did you self-manage this property?
Great question.
Yeah. It's pretty simple, when you grow in number of properties, then probably you might look at that aspect. But then to start with, I think it's very easy. To self-manage it.
Yeah, and just so you know, I know it's relative to say, I spent about an hour on how to screen your resident, how to market it, and you can just take those basic steps. But if Prasun has any problems, he can call Doug Butler, he can call Sorrel, he can call Evelina, even though she sounds Swedish. He can call any one of them and ask them questions, and they can walk him through that.
Yeah. Plus the education. We have just hours and hours of education. It teaches you how to do this. We don't just say go. You have a property, go get it rented, get it, and then manage it on an ongoing basis. There's education each step of the way, and when you do it the right way, follow the Lifestyles model, you can get. How long did it take you to get your property to get your tenant in, Prasun?
I finished the rehab and the closing. December start, and then by the end of the month, I had a tenant.
Yeah.
So typically what I teach you guys, just so you know, if you're listening for the first time, he will have the first month's rent and a deposit before his first payment's due. Because even though he closed on a property, you don't pay your first payment on your loan till 45 to 60 days later. So, what you're worried about is really not a monetary thing. It really takes care of itself if done correctly.
Right. Well, Prasun, thank you very much. Congratulations, and thank you for not only, thank you for being here, and like David teaches, thank you for giving back and helping other members.
Yes.
Yeah,
And
thank you.
Prasun, when we go live again, you get to meet me in person. I want you to come up and shake my hand, unless you're afraid of that because of COVID. That's okay. You don't have to, but I would love
We'll
to
figure
shake
out
your hand.
something.
There you go. Okay. Well,
Yeah.
thank you for giving back. We appreciate it.